Yesterday we activated the currency and valuation profile. Okay. Suppose if you want to make any changes, if the transaction data is not posted yet, then we can make changes by doing deactivation. Before activating, you can check in the transaction code 8KEP here whether all configuration settings are in place or right to go ahead and activate it, and we activated it up to 8KEP. We checked it. Suppose if your transaction data is not yet posted, then in that case you have an opportunity. You can deactivate, then you can make changes in your currency and valuation profile. But once activated, it's not possible to deactivate it. So once it is in deactive, then only you can make any changes. So here you can check for deactivation also whether it is possible or not. If transaction data is not posted, yes, you can, or it will tell us it's possible or not. You can see controlling area IN10 contains no transaction data. Deactivation of the currency is possible. If you could have posted already one or two documents in FI and CO, then it is not possible. You can go and deactivate it, and again you can make it changes as per your requirement. Then again same process, go to 8KEP. Again for activation, check if everything is fine, you can activate. Okay, so this is the 8KEU. If you want, you can use it for deactivation. Okay, be here. Let me put it again. This is again same as part of your controlling module, whether activation or we are doing deactivation. Transaction code 8KEP. Here you can check and activate your currency and valuation profile. This one, check and deactivation. At KEU. The next topic, we'll move to same in the financial accounting. We have seen the parallel valuation approach. In that, the legal valuation, group valuation, and profit center valuation. The next topic, we'll see about parallel accounting. This again as part of your financial accounting. In ECC, you have as part of new GL accounting, right? There we have the document splitting concept, the leading ledger and non-leading ledger concept. What is the main difference between classic GL and new GL? This new GL concept is introduced in your ECC itself. So whenever at the end of the year, the business organization need to prepare financial statements, we are preparing as per statutory requirements for local legal reporting purpose. The P&L account and balance sheet from the ledger 0L. Right? By default, whenever we create a company code, as part of financial statements, we need to prepare your P&L account and balance sheet. Once you create your company code, for example, IN10 I created company code, then by default it is linked to the, or it is assigned to the ledger 0L. And this ledger, we are calling it as a leading ledger, and we don't need to assign manually my company code to the leading ledger 0L. By default, automatically SAP will assign the company code once you create it to the leading ledger. In S4 also we have seen the company code IN10 is assigned to the leading ledger. First initially it was not assigned, maybe due to some inconsistency, but later automatically we saw that that is appearing under leading ledger 0L. Once we posted the business transactions in IN10, that means documents we posted, all those figures are updating in the ledger 0L. At the end of the year, I am preparing my P&L account and balance sheet as per the statutory reporting, if it is India as per Companies Act, and submitting to the government, fine. But at the same time, parallelly, I need to prepare the P&L account and balance sheet as per different accounting principle. For example, I need to prepare as per IFRS GAAP. Here GAAP means generally accepted accounting principles. One more set I need to prepare. Again I need to prepare at the same time parallelly P&L account and balance sheet as per US GAAP. Most of the things will be same, but slightly there is a difference is there for IFRS GAAP and US GAAP to fulfill, and as per your local rules to fulfill. For the same company code, for the same business transactions, I need to prepare a different P&L account and balance sheet as per IFRS GAAP, as per US GAAP. Then I have an opportunity to take the balances again from ledger 0L only. But this is compliance to your local legal reporting. To get compliance as per my IFRS, I need to do some adjustments. If I post adjustments in the ledger 0L, then my local legal reporting will be disturbed. Or if I post adjustment for IFRS US GAAP purpose, then again my US GAAP may be disturbed. So without disturbing other accounting principle, how to extract the P&L account and balance sheet, how to prepare, how to fulfill different accounting principles. This is called parallel accounting. Means for the same company code, for the same business transactions, I need to prepare different P&L account and balance sheet, multiple P&L account and balance sheet according to different accounting principles at the same time, simultaneously, parallelly. So this is called parallel accounting. This is introduced as part of new GL with a multiple ledgers concept. So here SAP has given a flexibility to create one more ledger for IFRS gap, and in that ledger you can make adjustments not in 0L ledger without disturbing your legal reporting, statutory local. And then you create one more ledger and post adjustment for US GAAP without affecting IFRS GAAP. This we have seen in ECC also, the same concept here in S4 also. If you want to do parallel accounting, you can create multiple ledgers. But not only that solution, as part of parallel accounting or to achieve parallel accounting, to do parallel accounting in SAP, we have two solutions. Of course, these two solutions are not new in S4. These two solutions are available in ECC also. So I need a parallel accounting. What does it mean? I need to prepare multiple P&L account and balance sheet sets according to different accounting principles for my company code or for my corporate group. Then you want parallel accounting. For that parallel accounting, you can achieve in SAP with two options. SAP has given two solutions. What is the first solution? First one is accounts approach. And second one is ledger approach. These are the two solutions provided by SAP. Now here I told for US IFRS GAAP create separate ledger, for US GAAP separate create ledger. This is the ledger approach. If you want follow accounts approach, you no need to create multiple ledgers. Only ledger 0L is enough. And then you can achieve parallel accounting. Then SAP recommends which one? SAP says, I don't recommend accounts approach or ledger approach. I will recommend both accounts approach and ledger approach. Both are same for me. Both are have same merits and demerits. For both are same equal importance. I will give your choice. The business organization can choose whether they want account approach solution or whether they want ledger approach solution. It's you have to decide. But the recommendation from SAP is for both it is same. You see the pros and cons of both approaches, and whatever is flexible for you, whatever you feel that is good for you, that you can choose it. But SAP side, they will recommend that both are same. They don't say this is good, go for accounts approach, or they will say go for ledger approach, this is good. Then we'll see what are the differences between accounts approach and ledger approach. Then we can decide ourselves whether it's better to follow accounts approach to get parallel accounting, or it's better to follow ledger approach and achieve parallel accounting. If you are following accounts approach, for example, need to create different account groups or separate account groups for each gap, for each generally accepted accounting principles. And then your chart of accounts will become complex. We have only one ledger approach, 0L only here in accounts approach. Then how to achieve US GAAP separately, IFRS GAAP separately? then local reporting, then create separate account groups, only one ledger but different account group. For US GAAP, separate account group, separate GL accounts. For IFRS, separate account group, separate GL account master data. For local legal reporting, separate account group, separate GL accounts. So many account groups. You have to carefully handle which account group is used for which purpose. So at the end, what it will become? The chart of accounts will be very complex structure, because we need to create a chart of accounts, under that account groups, under that GL account. So the multiple chart of accounts is only one, multiple account groups you need to create, and multiple GL accounts you need to create. The same GL account can repeat. A salary account you need to create for one IFRS purpose. Again, salary account will be created for US GAAP. Again, one more GL account is created as a salary account for that. Like that, multiple are there. So it's a very complex if you follow accounts approach. If you follow the ledger approach, we no need to create separate or different account groups for each and every gap. Only one set of account group is enough. So at the end, the result is simple chart of accounts. Second, for each gap, minimum one retained earnings account we need to create separately. Suppose you need to follow, as per this example, how many we need to prepare? 3 P&L accounts, 3 accounting principles we are following. For each and every accounting principle, we need to create a separate retained earnings account. But here, minimum only one retained earnings account is enough, which can be used for all account groups, the same retained earnings account. The same retained earnings account can be used in each and every ledger, or for each and every accounting principle also. That is possible, right? So we don't need to have multiple retained earnings account if you follow ledger approach. And here, if you are following accounts approach, the segregation or identification or representation or differentiation, whether this is belong to IFRS accounting principle or whether it belong to US GAAP principle. So that differentiation or segregation is done at account level, at GL account level. If you take one GL account, for example, salary account 300, 100, you need to identify, you need to segregate, you need to differentiate. This is salary account is for US GAAP. Then 300, 101, this is also salary account, but this is a for IFRS purpose. And one more GL account you take, okay, this is for local legal reporting. Like that, the segregation or differentiation, the identification of gap, whether it is local or international or which gap it is applicable. So that can be done at a GL account level, master data level. For each and every GL account level you need to do. But I am following ledger approach. The same segregation or identification to which gap this belong is done at document level. Here the GL accounts are common for all. Same GL account can be used in IFRS, US GAAP, in local legal reporting. Then how can I differentiate which is IFRS, which is US GAAP? That differentiation is happen at a document level. Take one document number 10023. Then you need to differentiate this 10023 document number should appear in IFRS GAAP, or it belong to US GAAP, or it belong to both, or this belong to only US GAAP. Like that, at a document level, at each and every document level, we can segregate, we can identify it belong to which gap this is pertaining. And here, more number of GL master records we need to create. Because for each and every gap you have a separate account group and separate GL master. Obviously, the number of GL master records, so many you need to create it. But here, compared to accounts approach, less number of GL master records need to create. And in accounts approach, the financial statement version means through which we are representing our P&L account and balance sheet, right? We need to create a financial statement versions. These financial statement versions need to create multiple, or maybe if you create single, that will become very complex to accommodate each and every gap. The complicated or maybe the multiple financial statement versions need to be created to get your P&L account and balance sheet for each and every gap. But here you can create only one financial statement version. The same can be used for all accounting principles. No need to go for multiple, or that one single also you can say compared to this one. It's a simple financial statement version can be created, and through that you can achieve. And second, from FI, whenever you are transferring data CO, that we know, right? Whenever we are posting documents in FI module, if it belongs to CO, the document automatically posted in the controlling module. The data will be transferred to the CO module. Here we can say all valuations data can be transferred to controlling module. What does it mean? For example, you are doing legal valuation, you are doing profit center valuation, you are doing group valuation, and only one ledger you have 0L. Whatever the data, whatever valuation you are posting in ledger 0L means all valuations we are posting in ledger 0L only. The data belong to all valuations can be transferred to the controlling module. But if you are following ledger approach, only the data posted are related to leading valuation, means is nothing but leading ledger, or from the leading ledger 0L only can be transferred to controlling module. For example, here you have a 0L ledger, Here you have a L1. Here you have a ledger L2, multiple ledgers. The data, the document which I posted into ledger 0L, that document only will go and sit in the controlling module. Only from that ledger only, the leading valuation only is going to CO. Whatever the documents I am posting in ledger L1, that will not be transferred to the CO. It is appearing only in F5. Whatever I posted in ledger L2, that is not going to CO. That is sitting only in L2, that is only in F5. So now CO, which data is updated? To the CO, which data is transferred? Only from leading ledger 0L. That we are calling it as the data only from leading valuation or leading ledger can be transferred to the controlling module. For example, for IFRS valuations, I posted data adjustments in L1. The same one I want in CO, that's not possible. The documents I posted for US GAAP adjustments that I want in CO, that is not possible, that you cannot transfer. Only from leading ledger CO, you can transfer to the CO module, into the CO module if you are following ledger approach. But if you are following accounts approach, how can I transfer? Here in accounts approach, there is no concept of L1, there is no concept of L2, and whatever you want for IFRS gap adjustment, that where you are posting in 0L. The US gap adjustments where you are posting in 0L. But I am using different GL for IFRS gap. For US gap, I am using different GL. Okay, you are using different GL, but at the end where you need to post in ledger 0L, there is no option for me to post somewhere else. Everything will be posted in 0L. Okay, from 0L already the channel is there to move to CO. So whatever you post in 0L, that will go and sit in CO. That's why we are saying all valuations data, whatever you did, whatever you posted in 0L, that went updated in CO. This is the accounts approach behavior, and this is the ledger approach behavior. By keeping in mind, now you can decide whether you want account approach or whether you want ledger approach. Anyhow, I don't want other valuations in the controlling module. I don't want to go for simple, I don't want to go for multiple account groups and so many number of GL records and complicated financial statement versions and difficult to identify at the time of GL account level, master data level. You need to maintain separate GLs for each and every gap. Instead of that, it will be better for me ledger approach. So most of the business organization will choose to go with the ledger approach for parallel accounting. So we also do in our company code solution to achieve parallel accounting through ledger approach option. Okay, not the GL accounts, or we can say accounts approach. If you want to follow accounts approach for your company code to achieve parallel accounting, for ledger 0L and your company code combination, in ledger settings transaction code, that is FINSC underscore ledger, this checkbox you need to select parallel accounting using GL accounts. Then SAP will understand that you are following the accounts approach and not the ledger approach if you select this checkbox. Then you can create separate account groups, separate GL masters, And all valuations, here valuation means all accounting principle related adjustments that you can post in ledger 0L itself. No need to go for other ledger, and everything will be transferred to CO module. At GL level, you segregate which is GL is related to which accounting principle. Then accordingly, you can prepare multiple P&L account and balance sheet. I don't want parallel accounting purpose accounts approach. I need a ledger approach. Then don't select this checkbox. Then SAP will understand that in your company code you want to follow ledger approach, and it will allow you to create multiple ledgers. So now we can create multiple ledgers for different accounting principles, different ledgers along with 0L. 0L ledger is called a leading ledger, which is created by standard SAP. You don't need to create it. Whenever you install SAP, automatically the 0L ledger is created as a leading ledger. You know the concept of leading ledger and non-leading ledger as part of your ECC, because there itself we created leading ledgers and also non-leading ledgers. Now in S4, SAP come up with some more developments with respect to ledger approach concept in parallel accounting. In ECC, there are two types of ledgers, right? Maybe you can put side by side, then you may understand. Here the terminology is important and don't confuse. In ECC, you know that there are two types of ledgers. One is a leading ledger and second one is a non-leading ledger. What is a leading ledger here? Leading ledger is a 0L which is created by standard SAP. By default, each and every company code automatically is assigned to the 0L ledger. All sub ledgers, whatever you are using, that is integrated automatically with the 0L ledger. And 0L ledger receives the settings from the company code. Means you created company code IN10 and local currency is INR. Then for 0L also first currency is INR. You created company code US10. Then for 0L first currency is USD. Then here I am saying for 0L first currency INR, first currency USD. How can it be possible? So always you should not talk only with ledger point of view or company code point of view. Always you need to talk with company code plus ledger combination, any settings or anything. So for ledger 0L and company code IN10, what is my first currency? INR. What is my fiscal year variant? April to March. At the same time, if you create US10, then for 0L ledger and US10 combination, my first currency is USD. The fiscal year variant is January to December. Our posting period variant will be different. So like that, you need to see company code plus ledger combination. That's why we are saying the ledger will receive settings from the company code. All company code data is available in 0L. You can take P&L account and balance sheet as per any one of the accounting principle, either IFRS, US GAAP or local your statutory reporting. There should be only one leading ledger. There cannot be more than one leading ledger. This is the standard SAP behavior. Then apart from leading ledger, you have a freedom to create ledgers. Apart from leading ledger, whatever ledger you created, those all ledgers are called non-leading ledgers. For non-leading ledgers, you have to assign manually company code. For example, I want to use non-leading ledger L1. So into L1, the data, whatever you are posting in IN10 that you want to transfer, you want to update, yes, then assign company code IN10 to L1. I want to transfer the data from US10 also. Okay, you assign manually company code US10 to the non-leading ledger L1. And the first currency of the non-leading ledger will be same as the first currency of the leading ledger. And second and third, you have a freedom to choose different one. And fiscal year variant also, you can choose a different fiscal year variant. In this way, we have this concept already we are using in ECC. You can create multiple non-leading ledgers. Now, in S4, there is a difference, or there is a improvements. They come up in S4, SAP come up with a new concepts, some more changes in the ledger approach. In S4, ledgers can be divided into two types, or ledgers are of two types. Number one is a standard ledger. Number two is extension ledger. One is a standard ledger and one is a extension ledger. Standard ledgers are again of two types. One is a leading ledger and another one is a non-leading ledger. Here what you need to keep in mind, normally whatever the objects are created by SAP, that we will call it as a standard. Document type SCA, standard document type, because it is created by SAP. Posting period variant 40, we will call it as a standard posting key because it is created by SAP, not by the customer. Ledger 0L is created by SAP by default. That's why we will call it as a standard ledger. The non-leading ledger L1 and L2 is not created by SAP. It is created by the customer. That's why generally we should not call it as a standard ledger. But here SAP is using the same term standard ledger, even though you created yourself. It will be called as a standard ledger here. Okay, so that's the confusing point here, and you need to remember carefully that the leading ledger and non-leading ledger both will be called as a standard ledger in S4 system. The leading ledger is created by SAP 0L and all your company codes are assigned by default to the 0L, same like in ECC. The non-leading ledgers, if you want, you can create your own and you need to assign the company code manually to the non-leading ledgers, same like ECC. These both are called a standard ledger. Along these two, then one more new type of ledger is introduced in S4, that is called extension ledger. Extension ledger also you created, non-leading ledger also you created. Then what is the difference between non-leading ledger and extension ledger? Why I need to go for extension ledger again? Or what is the benefit I will get it? Okay, so here we'll see in ECC how the non-leading ledger will behave. This is the leading ledger 0L, which is created by standard SAP, and all company codes are assigned to this leading ledger. Whatever the data you are posting in your company code IM10, all the documents will go and appear in 0L ledger. For example, you posted 1000 documents and you go and see in 0L ledger how many documents are there. 1000 documents are there. And you created non-leading ledger L1 also for a different accounting principle. Maybe this I want to follow local legal reporting, and L1 I thought I want to use for US GAAP. Whenever you are posting documents, we don't enter to which ledger this document should go and update, right? For most of the business transaction, just and keep on posting document. Whenever you are posting a document, what is the SAP behavior? Will it update 0L ledger, or will it update only L1, or will it update both? It will update both. If you are posting document and you don't specify, you don't told to the system that into which ledger this document need to be posted, you are silent. You are not specifying anything, just you are posting a document. Then system will assumes that you want to update that document in each and every ledger whatever you have. So system will post the document in 0L ledger, and also same document is posted into L1 ledger also. That means the duplication of documents are posting. Here the document 1 posted, again here also document 1 posted. Number might be different, but entry salaries account debit to cash account 1000. Here also salaries account debit to cash account 1000. Purchase you did same. So like that, here 1000 documents posted, here also 1000 document posted. Because of that 1000 documents or whatever the data you posted for 1 year, maybe 10 GB memory is occupied in your database by 0L. Same L1 also it will occupy 10 GB because same data right here also. And at the end of the year, for US GAAP reporting, some 10 documents I need to post adjustments. Whenever you are posting those 10 adjustment documents, you told to the system, please update these 10 documents into ledger L1. Then those 10 documents are posted in the L1. And that is not updated in 0L ledger. Fine. From this, now from these 1000 documents, you are preparing one P&L account and balance sheet for local and legal reporting. From these 1010 documents, you are preparing P&L account and balance sheet for US GAAP reporting. I want now for IAS one more accounting principle. What is the solution? Go and create one more. Whenever you create one more, again means assume initially itself you created. Again here also how many documents will update? First 1000 documents you have not specified anything, right? So again here also 1000 documents updated. For example, ledger L2. And for this accounting principle, I need a different adjustment, not what you posted here. So here only I posted 5. Fine, with that you achieve one more P&L account and balance sheet. This is the ECC behavior we have. Here 10 GB you consumed, here 10 GB you consumed, here 10 GB you consumed. Total 30 GB data footprint is there in your database. 1000 documents same, here repeated again, here you repeated again. Again you are posting the duplication of data, increasing your database with duplications. Nothing is difference. What the difference? These 10 documents are the difference. What is the difference here? 5 documents are the difference. Remaining all are same. But if I want different P&L account and balance sheet for a different accounting principle, the same 1000 I need to repeat and post it again. Same 1000 again I need to repeat and post it again. Now SAP thought, how can I stop this redundancy, duplication, unnecessarily updating again and again same documents, again posting same documents, wasting of 10 GB data, again wasting of 10 GB data, 20 GB data is wasted unnecessarily. Of course, it's necessary to achieve accounting principle, but is there any way without wasting this many memory space? without duplication of documents. Why I need to post again and again same document? Why can't you take the same 1000 here, you can reuse it without wasting here memory? Is there any way? So with that, they come up the concept of extension ledger. You know what is a leading ledger? Now you know what is a non-leading ledger. Apart from leading ledger, whatever ledgers we are creating that are called non-leading ledgers. And the first currency and second currency, fiscal year variant you can maintain differently. Here also same. You can maintain the fiscal year variant different. Here maybe January to December you are following, but in this ledger for the same company code you can follow April to March. Like the different fiscal year variants can be maintained for different ledgers. The first currency may be same, but second and third currency can be maintained with different currencies, different posting period variants. The same concept here also. Apart from that, now here additionally we have a new concept that is called extension ledger. What is the extension ledger? These extension ledgers are created on top of the standard ledgers. That means it cannot be created independently. It cannot be created in own like this. The extension ledger need to be created every time on top of the standard ledgers. There should be a standard ledger, and then on top of that you can create one extension ledger. Or you can say, just go and staple on top of the standard ledger. Why you need to create on top of the standard ledger? Why you are stapling again on top of the standard ledger? To get different valuation approach, or to achieve different valuations. Or you can say these are created as extensions on top of the standard ledger. For example, you have a 0L ledger. Now we'll put same again here also, the difference between ECC and S4. Right, in ECC how you have 0L, in the same way here also I have 0L. Here also 1000 documents posted. And from this I am achieving one P&L account and balance sheet. Now I want one more P&L account and balance sheet as per different accounting principle. Now here we have a concept of extension ledger. If you want to, here also you can create non-leading ledger. Okay, I created same non-leading ledger L1. Here also 1000 documents posted. Same 10 GB consumed, for example. Here also 10 GB wasted again, duplication of data. Then again I need one more accounting principle. Then you can use extension ledger concept, and you no need to create one more non-leading ledger, and you no need to waste 10 GB data, and you can create extension ledger. Shall I create directly now like this? This is an extension ledger. No, you cannot create. What we are saying, extension ledgers are created on top of the standard ledger. Is it a standard ledger? Yes. Is it a standard ledger? Yes. You can staple on top of the standard ledger. The standard ledger, you can extend it and then you create it as an extension ledger. That's why the word we are saying extension. Already there something and that you expand it in layman language, that you extend it. Then we can call it as an extension ledger. Why we need to do? I want one more valuation. We need to prepare one more P&L account and balance sheet. To understand, I can put it here. To avoid confuse first time, I am putting the same separately here again. Okay. Assume here you have like this. This is the standard ledger, 0L. On top of that, I will staple one more ledger, or I will extend this 0L ledger. This is 0L ledger. And already 1000 documents are posted. On top of that, I am extending, I am stapling one more view. Maybe the same, I'll put it. The ledger I am creating with name E1. Now this E1 ledger is called extension ledger. For extension ledger, there should be a underlying ledger. Or we can call it as a base ledger. So if you are creating extension ledger, for this extension ledger, there must be base, or we can call it as a underlying ledger. I don't have base ledger, I don't have underlying ledger, then you cannot create an extension ledger. Simple. If you are creating extension ledger means there must be underlying ledger, there must be a base ledger. Underlying ledger means for extension ledger there need one support. Assume without this the extension ledger cannot stand here. It need a support. Who need to support? The standard ledger. Someone should be there under that ledger. Who is that? The standard ledger. Then this extension ledger can be created, can be survived. That's why we are calling name as a extension ledger. So now here underlying ledger is 0L. Base ledger is 0L. Can I put L1 as a base, as a underlying? Yes. So underlying ledger as base ledger can be a standard ledger. Standard ledger means it can be a leading or it can be a non-leading also. And now this extension ledger you can use for different valuation purpose. For example, this I am using for a local legal reporting. This I am using for IFRS. Now this you use this extension ledger to achieve parallel accounting, to fulfill your financial statement as per US GAAP. To avoid confusion, now let me remove this. So now how many ledgers you have? One is a 0L ledger, 1000 documents are posted, 10 GB is wasted or 10 GB is utilized. For one more non-leading ledger I have L1, 10 GB utilized. total 20. I created one more extension ledger. From this I will achieve US GAAP reporting, and there is no 10 GB wasted, only 20 GB. But here you have 30 GB. But here only 10 GB. And here 10 documents you posted. Yes, here also 10 documents posted. Then achieved whatever you want. Here same L1. Now here whatever report you are achieving through L2, here what you achieved L2, 1000 is common and additionally 5 documents posted. Those 5 documents I will post in extension ledger E1. Only 5 documents. Memory is consumed. 10 GB is saved here. How? If I take report from 0L ledger, the system reads data 1000 documents and it will prepare P&L account and balance sheet. From this I prepared one P&L account and balance sheet with how many documents? 1000 documents. Here also same, correct. Second, you prepared P&L account and balance sheet with 1000 plus 10. Here I prepared 1000 plus 10, correct. Here you prepared 1000 plus additionally 5 documents. But here as part of this, what you have? Ledger E1. But here how many documents are coming? Only 5 documents are posted into E1. Then how can you prepare P&L account and balance sheet with 1000 plus 5 documents? It's only 5, right? For seeing in E1, only 5 documents are updated, correct. If you go and see in E1, how many documents are there? 5 documents are there, correct. 10,000 documents are not there. Whenever I pull report from E1, how SAP will behave? SAP will go and check in E1. How many documents are there? 5 documents. It will take 5 documents. And whenever you see inside deeply into E1, like assume it's like a box. On top of that you have one more box. And stand up here and see inside E1. How many documents are appearing for you? Like objects. 5 objects are appearing. See deeply inside also. If you see inside also, again under, there are 1000 documents are appearing. Of course, this is a different box. But for me, whenever I see from top of the view, I can see inside depth, more depth. For me, it is appearing like one box only. And first I can see 5 objects. And if I see more in depth, then I can see some more 1000 documents are lying inside. Then whenever I pull report from E1, system will pull the documents, 5 documents, and also it will pull the documents 1000. Total 1005 documents it will pull, and it will give the report in the output with 1000 plus 5 documents. That's why the same result, whatever you achieved here, that I achieved here with the extension ledger. Right? So whenever we are posting documents in S4 and you have not told to the system anything, then system will update all ledgers. Here also you posted document and not told anything. It is updated in 0L, it is updated in L1, it is updated in L2. In S4 also I am posting document and I am not specifying anything to the system. Please post into that ledger or this ledger. I kept silent. Then system will post the document in 0L ledger. System will post document in L1 ledger, and system doesn't post into extension ledger. That means the automatic postings will be updated only standard ledger. Into extension ledger, only manual postings are allowed. This is important. You need to keep in mind, manual postings are allowed in extension ledger. Or we can say manual postings only are allowed in extension ledger. If you are posting a document and you don't specify any ledger in S4, it will update only the standard ledger. That means it will update leading ledger and it will update non-leading ledger, but it doesn't update extension ledger. Any automatic postings, for example, you are running depreciation, you are posting Miro documents, whatever you did automatically, our system is posting. Nothing is posted to extension ledger. Only I am posting a document and manually told to the system, please you go and update E1 ledger. Then that documents only will be updated in E1. And you can maintain different fiscal year variant and you can maintain different currencies. Sorry, for extension ledger, if I say different fiscal year variant, different currency means with respect to L1, you can say different fiscal year variant, different currency. But for extension ledger, the fiscal year variant and currencies must be same as base ledger. Because for you, base is which one? For E1, what is the base? 0L. Now 0L, whatever fiscal year variant is following, this A1 also should follow same fiscal year variant. The 0L, whatever currencies is following, the same currencies need to follow by the E1, because whenever you are pulling report, you are taking completely as a one box, one ledger, right? That's why the fiscal year variant and currencies must be same as your base ledger. Okay, so this is the new concept provided in S4. This is the major change with respect to your ECC related to parallel accounting or related to ledger concept. So the main thing you need to remember, leading and non-leading both are called standard, and additional ledger is given extension. These extension ledgers can be created on top of the standard ledger, or you can staple on the standard ledger for different to get different valuations. And for creating extension ledger, there must be a base ledger or there must be a underlying ledger. The underlying ledger is the standard ledger only. And into that fiscal year, variant and currencies must be same as your base ledger, and only manual postings or specific postings are allowed into extension, and automatic postings are not allowed. I want to post depreciation, not possible. I want to post some Miro documents, it's not possible. Only the manual postings are allowed into extension ledger. Physically, only 5 documents are there in the extension ledger, but whenever you pull the report, system will take the documents from extension ledger as well as its base ledger. Everything will come into the report. Suppose I have extension ledger E1. On top of E1, can I create E2? E2 I am creating. For E2, base ledger is E1. It's not possible. What I told, underlying ledger or base ledger must be the standard ledger, not a extension ledger. You cannot put for one extension ledger another extension ledger as a base. For extension ledger, the base should be standard ledger. Means leading or non-leading. On L1, you can create, yes. Now I want one more valuation that may be more relevant, the documents which I am posting in L1. Now you go and create here on L1. E2. Now this E2 extension ledger can read this 1010 documents plus maybe 2 documents you posted, 1012 documents. Can I staple one more ledger on L1? Already L1 is used as a base ledger for E2. Yes, you can staple one more ledger on L1. This is E3. And here you post 3 documents. If you take report from E2, 2 plus 1010, 1012 documents will read system. If you take report from E3, 3 documents plus 1010, 1013 documents will read, not that 2 will be excluded. So in this way, that's why the system, that's why SAP is saying these are the extension ledger. This ledger you are extending with different views. You can create so many extension ledger on top of one base ledger. Or another name is there for same extension ledger that you can call it as extension or appendix. In different versions, different name SAP changed. Again, if I say extension ledger, same. or if I say appendix ledger, same, or if I say I'm stapling the ledgers on top of my ledger, that will be also same. Okay, so SAP is saying if you follow this extension ledger or appendix ledger, you can save the space in your memory in the database, and you can reduce the data footprint to avoid unnecessary duplication of documents again and again. If you feel that on top of my leading ledger itself, this L1 view also I can get it, you no need to create L1 non-leading ledger also. But it's required and not possible, then you can create non-leading ledgers. But your data footprint will be increased because of leading ledger. But with the extension or appendix ledger, it will not be increased. But what is the problem with extension ledger or appendix ledger? The automatic postings are not posted into E1, only manual postings are allowed. And the fiscal year variant and currencies must be same. But I want for different reporting purpose, different fiscal year variant. Then you cannot use extension. You have to go for non-leading ledger only. Because my fiscal year variant I want different. Then you create a non-leading. That's why in S4 we need to use leading. It's mandatory. It's not possible with some features with extension ledger. So I need to go for non-leading ledger. Then again you can go with the extension ledger. Okay, so this is the concept about standard ledger and extension ledger, which is the difference in S4 or which is the new thing in S4. And now we can create in our company code one or two non-leading ledgers and some extension ledgers, and then we can go for document postings and how it will be updated we can see it. Okay, so as of now, maybe if you have any doubt you can ask.
Hi, sir. This is the Durga.
Hmm.
So, regarding the extension ledger, could you just give us one real scenario? I mean, example for when we create the extension ledger under this non-leading ledger. Could you just tell us any one scenario? When do we create extension ledger under non-leading ledger?
Same here, to take this is for local legal reporting you are using,
Hmm.
and this you are using for US GAAP,
For US GAAP. Huh. So, we are using
and
it for different
for
accounting
this you
principles.
are
Huh.
using IFRS GAAP. And now
Okay.
same in S4, the same company, maybe you migrated to S4. Here the same 0L, whatever I am using local, I am using local reporting. And this L1, maybe same you are using for US GAAP. As of now, no difference. Now I want to go achieve IFRS. Now you decide
Okay.
IFRS reporting is more similar,
Mm.
is more compliance with respect to local reporting or with respect to US GAAP.
But we do one assignment, right? So, like we will assign the ledger groups to accounting principles. So, nowhere we'll do this ledger assignment for the extension ledger. So, how do we differentiate that IFRS and US GAAP?
At ledger group level, you can assign accounting principle. The
But again, ledger groups are assigned to ledgers, right?
Yes, the ledger group which is created by SAP, one ledger group. The ledger group which we
Hmm.
created manually, one ledger group again. While creating ledger groups are two types. One is created by SAP, one is created by us.
So, you're saying E3 and L1 will be together assigned to one ledger group.
Yes,
Then in that case we can achieve only one accounting principle requirement, right? We need a different accounting principles.
yes. See, accounting
Whether is that
principle.
possible with the extension ledger?
Yes, accounting principle doesn't control any functionality. It doesn't have any rules. It doesn't have any functionality checkboxes or radio buttons to control. In SAP, just is an object to tell the name, to tell the difference. That's all. For example, L1 is for IFRS or US GAAP. It tells the description. Apart from that, it doesn't do anything.
But while we extracting the
Yes.
reports, we should have
So
some
manually,
differences like to
manually,
identify it.
manually,
Uh,
you have to extract if you want US gap, the extract
uh,
report from ledger L1 here. I want IFRS. IFRS, I am feeling that see, it's more compliance to, or it's more nearly, approximately nearly to the US gap, not as per the
mm,
local. So
mm.
here for IFRS, for example, E3, you create as a staple ledger, extension ledger. This is for IFRS. Okay. And for these five adjustments you are posting here, maybe assume this 10 also you need for that. On top of that, maybe you posted extra 5. Then 1000 plus 10 plus 5, you can take it report from E3. The accounting principle might be same or different. Leave it. But whenever you take
Okay.
report from E3, how many document system is pulling?
This I actually understood. Like you're saying, they have increased that one more block they have given for the standard ledgers. That is extension. So there you can see the like whichever the entries explicitly posted to that ledger, you can see along with the previous postings. That I
Correct,
understood.
correct.
But when I related to accounting principles, I'm not understanding it. What is the real importance of this extension ledger? Are we achieving it or not?
Yes, see here, maybe your doubt is for E3, you need to put IFRS.
Hmm.
And then, yes, this you are using for local, this you are using US gap, and this,
And the other one is IFRS so that I can reduce the even the size
yes,
also,
yes,
right? I can
yes.
achieve the three reporting
Suppose if
purposes.
your system is not allowing for you to assign IFRS, you put US gap.
Hmm.
Because of assigning
Okay.
US gap accounting principle, your functionality will not be changed. Your five documents behavior will not change. Nothing is changed because this US gap is just a description. This doesn't control anything. It doesn't have any controls, any functionalities affecting. Nothing will be there. Only just it's a description, you can say. Even though if this
Okay.
US gap is there here, but you can take report for IFRS.
Okay. So in that case, one more thing, we can create multiple extension ledgers under one underlying standard ledger,
Yes,
right?
here you can
We
put
can
one
create
more.
multiple. Then in that case, in any company, we can propose one a standard, I mean, local ledger, leading ledger, and remaining they can create it under extension ledgers, right?
Yes,
For achieving their reporting purpose.
yes,
Just one non-leading ledger is, even this non-leading ledger is also not required, right, sir?
yes.
One
See,
leading ledger along with that only we can achieve for I mean by using the extension ledgers we can achieve other reporting purposes, right?
correct. So theoretically, it's fine. You can say
Hmm.
why you are creating multiple non-leading ledger. Go with only one leading
Hmm.
ledger is there that you made as a base ledger, and on top of that you create multiple extension ledgers and achieve it.
Hmm.
Fine. When you come to practicality, whenever you are creating multiple extension ledgers, your local reporting in India is happening with fiscal year April to March
Okay,
for
so if
for
there is a
IFRS.
difference in the fiscal year,
Want
huh?
April to March or January to December? I want January to December. Then is it allow with extension ledger different fiscal year variant? No. So
No, it's
then
not
we
allowed.
have to go for non-leading ledger. Currencies must be same, but of course my requirement I want a different currency. Then extension ledger is not possible. Go for non-leading ledger.
So we need to create the non-leading ledger as per the different fiscal year and different country specific requirements. But again, in one specific country, if we have to extend the reporting view from US GAAP to IFRS, then we can use this extended
Yes. So that
ledgers.
means
That's it. Other case,
only with one standard
huh,
ledger it's not possible. Suppose here maybe you created six ledgers. Here you
hmm,
cannot say drastically I can create only one base ledger and remaining all five extension. No. Maybe here also you need to create one standard, one leading, and maybe three non-leading. On top of that, maybe two I can save. Instead of creating non-leading ledger, I can go extension when my fiscal year variant, my currencies, and everything are same.
Okay. So this is basically for achieving the different reporting views in a particular country. I mean, when there are different fiscal years, we and again in the different fiscal years, if they wanted to see the reporting and two different accounting principles, then we can use the extension ledgers,
Yes,
right?
yes, yes.
Wherever when there is a different fiscal year variance, then we cannot use the extension ledger. I mean, the non-leading ledger is also required.
Correct.
Okay.
And one more thing, this also you need to keep. Only manual postings are allowed.
Yes, yes, because nowhere we are assigning this to company code or anything,
I
right?
am
I
running
mean, for the automatic
I
postings,
am running
like
AFAB depreciation.
okay, huh,
One depreciation area should go and post my base ledger. Another depreciation area I am using US GAAP that should go and update US GAAP purpose E3 extension ledger. Right? Depreciation area 01
hmm, and 15.
is legal. So
15,
this should go and update which
hmm,
ledger? 0L. Okay, updating.
yes,
Let's create a depreciation area 02 for US GAAP.
hmm, okay.
This should go and update which ledger?
Use E3 ledger.
It's not possible. Extension ledger
Yes,
can receive
because
only manual. AFAB it will become like automatic. This automatic posting is
okay,
not possible to post to extension. This automatic posting is possible to only standard, either 0L or non-leading.
or
I want this depreciation in a particular ledger. Then you have to create a non-leading only, no other option. If you say I don't want this US gap in a separate ledger, then you can create US gap purpose extension. So other factors you need to keep in mind. Again, your solution will come to non-leading ledger only. Only rare cases you have to go for extension ledger. So theoretically it is fine. That's why I told. You can say that theoretically you can tell you can create on top of your base ledgers, create extension and save your data footprint. But coming to practicality, most of the cases we have to go for non-leading.
so we cannot use this as a. I mean, we don't have a complete features of standard ledger, right? So that is the reason it has its own limitations, and the purpose of extension ledger is,
Yes,
it's,
yes.
I think,
You can say it's a
different.
difference. You can say it's an improvement. You can say in S4 you can reduce data footprint clearly with the concept of extension ledger. It's which will allow only manual, nothing automatic.
But why they have given only for manual posting, sir? Why they have not automated? Like, is there any issue that SAP has not given this feature?
The
Like, if
concept
they give
of
it for the automatic versions,
you mean to say extension means I have something here that I want to extend here without touching
hmm,
non-leading. If you post it directly, it's not an extension concept. This is a different completely. This is a different.
okay.
They don't want to keep like different. Something should be there that you want to extend it. So then in the extension, put manual postings, adjustment only. That's what I told. Here, if you are creating six ledger, with this concept, you are thinking that I want to put only one and remaining all five extension. Don't go with that much uh, provide advantage. If you are creating six, here you need to create at least four and save only with two ledgers. Then your practicality also will be flexible.
Okay, sir.
Hi sir, this is Anil. Actually, I have one small doubt here. So in 0L ledger, automatic posting is there, and L1 also automatic posting is there. So in this both the cases, the same documents are there, or can be posted another few documents if needed.
The thousand and thousand both
Yeah,
are
here
same.
1000 documents both are same. So in that case, can we use 0L as the same as L1
Yeah,
also?
here also you can use L1. You can remove L1. And 0L is following which fiscal year variant? April to March, right? In India. For
Okay.
that, you want to achieve January to December. then whatever L1 purpose you created here, one extension ledger, new extension ledger, can it follow January to December fiscal year variant? No, that's the limitation. You cannot follow. You have to follow here also April to March. But I want January to December. So it's not possible for me. Then I created L1.
So again, duplicate documents, right,
Yes,
sir?
but I want fiscal year variant, right? If you say please reduce in the business organization duplication, data footprint, unnecessarily you are wasting 10 GB, then how can I report my January to December? I need January to December reporting as per US GAAP. That the SAP is not giving for extension ledger. That's why they kept still non-leading ledger. If that option is there, why SAP will keep non-leading ledger? They will remove non-leading ledger concept and they will put leading and only extension.
Okay. Okay. Thank you.
So that means theoretically we have to say leading, non-leading, extension. If you go for extension, you can save data footprint, so on, so on. But whenever you come to your practicality, your requirement, the fiscal year variant, currencies, automatic postings is not possible in the extension. If that is requirement for the business, for the requirement for you, again you need to go for non-leading ledger solution only. If those are not the breaking point for you, stopping point, then that case only you can go for extension ledger. Okay, fine. Then tomorrow we can clearly.
Sir, one small doubt,
Yeah.
sir. So currently you're not giving any notes